Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Thursday, the 17th of November, 2022. Just getting on at 6:25 p.m. Central Time. Hey, to all of you that did attend the live webinar, we had a ball today. Did that not move fast? Did we not cover 20-some-odd stock charts, lots of futures, answering questions galore? It was great. Now, I won't be having one probably until early December again. You'll get the invite. And then that might be it until we get into 2023. I will be here for the holidays, but attendance drops off, and I have other things that I like to do with family and so on anyways, but I will be here. So, there's an interesting setup happening. I think that's the right word. The Dow has been trying to carry the other indices and prevent them from breaking. It's been the strongest of the indices. It's the only one embedded, and it's flirting tonight with losing that embedded reading. Today was a day that I told clients early on to buy it and late in the day to sell it. And folks, I am not a day trader. That is not the style that I set up typically. In fact, most of the day trades I do are in losers because you get in and the market didn't go your way and you're out. But I noticed early on, you're barely hanging on, and I just told traders time to cash in. At the same time, the foreign currencies are looking at the dollar, trying to figure, is the dollar going to pop here or decline one more time? It's difficult. Bonds and notes, you see the 2-10-year, it's getting all the publicity. You're in the high 60s, the difference between the two. We were just recently in the 30, then the 40 level, then the 50. Now we're in the high 60s. Are we going to the 100-point level? You could. Why? Because whatever the Fed's going to do, it's all about the front end of the market. The back end is saying they can't go too far. They'll cause a recession. Those high interest rates won't prevail. Mortgage rates fell about 0.4 of a basis point, the biggest drop in a very long time. They're back to 6.6. So they look at the 10-year to try to figure out where to go. Interesting time. When you look at the S&P, yes, we rallied up to the 18-day average, but as I said, it's generally an area when you do that, the market plays around a little bit. For the week, we're down 1%, hanging in right by that. When you take a look at this action, did we not just say yesterday, I'll even take you there, we had the charts looking like this. And I said, I don't know. Looks to me like distribution going on. I've used that in a couple of the different titles I do on my YouTubes and so on. And look at how that's slipping back. Well, you're still in it. You haven't set up a pattern one way or the other, but the swing line has. The swing line turned down. You now have lower highs, lower lows. It's in a downtrend mode. Where's it gone to? It's gone back to this number. I thought it would, the 100-day average, and it could elect to get to the 18. Doesn't have to. It might want to trade between here and the Bollinger Band right up here. Now, on the next rally, if we get one, a lot of resistance between 40.78 and the Bollinger Band. They'll get even tighter together. But the question is the market going to hold the 100-day or slip down to the 18-day average, which is almost 80 points lower at 38.78? Hard to tell. What I can tell you is you're not in an uptrend. You're in a bearish correction within a market that has bullish bias for the time being, which is confusing. When you come to the Dow, this is why I told my traders to bail today. You're already at a 74 reading, and you're not down very much. Well, this is the S&P. I'm sorry. I'm so anxious to talk the Dow. You're there, and you can see that you didn't embed. Here's the NASDAQ, higher lows, higher highs. You tell me you didn't run into the buzzsaw of the 100-day average and the Bollinger Band. Again, for those of you that take the enhanced Bollinger Band course, you got to be slapping yourself in the face going, why was I getting bullish up there? It's exactly what Ira teaches. That is where the pros come out. They let the Johnny-come-lately zone it up there, and they're always going, why didn't it follow through? Overbought, uptrend, but overbought's difficult. This is the market that I'm watching. The reading here is under 80 again, 79.99. And with the break, you've turned away from having higher lows, higher highs. So you're setting up a potential correction that if you close under 79, you're opening up the door to get back to 32,934, which in this market's over a 500-point break. So it's not a little bit. It was enough to tell me, to tell my clients, cash in, go to the sideline. In the Russell, higher high, lower low. And again, you fought the first challenge of a 200-day average. You hadn't hit that in a long time. You've got to learn to pay attention to that. It's like a road barrier. Yeah, you can get through it, but where are you going? You've already spent your energy. You pull back for another fight. Now, once you start hitting it a couple of times, then it's no longer the big barrier that it was. It'll still be initial resistance, but not that huge barrier combined with the Bollinger Band. But you've lost momentum. You've lost your way in a trend. You're waffling in the market. When I step over to the VIX at this point, the market's probably going to rally into the 18-day average, the 100 and the 200. It's still in a downtrend. It lost its embedded reading. If stock indices give up some more ground, that'll give this market reason to get back here. But I'm going to repeat what I have said all the way through. You don't get bear markets out of falling VIX. It's the opposite. You offer support. The trade is saying they don't want insurance. Interesting. Okay, so the bonds and notes. Are we going to embed? Embedding occurs when the slow stochastic reading locks in the momentum bullish. If it's over 80, bearish. If it's under 20, and you do it in a certain way. Once it locks in, the trade becomes buyers on the break until the red line closes under 79. Now, where do they buy? How do you do it? How many times do you allow it to hit that key moving average? I discuss all that and teach it in the course. When you look at this, though, you're at a resistance point. The trend is up. Up means falling interest rates. Down in futures in the Treasuries means rising interest rates. That's what you have. And in the dollar index, you still have an embedded reading, which is saying the market could still be coming down here, not up. Very important. Eurocurrency, if the dollar is down, this is up, and that's what you have. I always tell my clients, and I will tell you this, you don't end up long euro, short the dollar, or long the dollar, short the euro. Play one or the other, because 40% of the dollar index is made out of this. You don't need that overweighting. I read what they're doing in the British pound in terms of Mr. Sunak and Mr. Hunt's game plan. And the fact that the market did not fall out of bed, it was down during the day, and you can see that right here. You have an outside day down. So the reaction to it wasn't, how do I put it? It wasn't anything. It wasn't like mistrust. You didn't get the break here. Let me step back here. Like when she announced her plan and the market fell out of bed. So the market is saying it's credible. Is it realistic? Does it go far enough? Have they tied it together with the Bank of England? There's many things that we'll read about through the weekend, and then I'll have a better idea. There's a lot of people smarter than I am in understanding that. Suffice to say, are we embedding? So let's backtrack on this market. Here's Thursday's action. Both numbers are over 80. Here's Wednesday. They're both over 80. And here's the day before. You have an embedded reading. Will it hold it? Well, right now the answer is yes, it's holding it. So on this break, at least so far as a technician in the charts, the trade is buying until you get the red line to close under 79, and then look for a retest of the upper Bollinger Band. Do I know enough to want to do that? No. But that doesn't mean that's not what the chart is saying. Take the name off the chart, and those are the things you'd be doing. In Bitcoin, I keep reading about what's going on with Mr. Bankman-Fried. It sounds to me that there were no controls. Are they building a case for fraud? I mean, they dance around the issues. They don't say anything other than total mismanagement, no controls. They can't find the money, but nobody has said a crime has been committed. You do realize that. I am not saying he committed one. I'm saying what they haven't said. Is this circling the wagon, and then you're going to drop that bomb and tell the people that? I haven't heard that he doesn't want. He made a mistake. He shouldn't have declared bankruptcy. Okay, but bankruptcy is all about protection. Why shouldn't you have gotten protection? You don't have the money, and how come nobody can find the money that you said you had when it's not there? And how do you run a business with $9 billion in debit in liabilities, and you don't even have $1 billion in assets in the company? I realize that you ran a huge company. It came crashing down around your ears. Everybody gets their 15 minutes of fame. Was that it? I don't know. I don't know enough about it to criticize it, but something's not right. In any case, you're oversold, market down here, sort of drifting. We'll see what happens. Well, by the way, have you noticed the regulators haven't come in to close anything in that yet? It's unregulated. That's why. What rules have been broken? They got to commit fraud in order to get anything going. And that's where the law cases are coming. What do you think about the fact that lawsuits are now coming against celebrities that endorsed FTX and other Coinbase and other products? Is that the right thing? I'm not convinced I agree with that. Endorsing a product, your seal of approval, doesn't mean that you're telling the guys on the street, I'm guaranteeing your money. You could have been paid in that product. Hey, I like Coinbase. I like FTX. I like this one, Gemini. I like these crazy names that they all have. I don't know that you go from A to Z. I haven't made up my mind that that is wrong. And if one of those cases is lost, what are you going to do for your Medicare help when I'm looking now at William Shatner, Joe Namath, that guy from the funny gentleman, oh God, from many years ago. A black comedian. He's just terribly funny. Jimmy Walker, is that it? I think so. And there's a new one. There's one other, William Forsythe. Is that it? He's one of the guys now. Are all these guys guilty because they're telling you go to Medicare and something goes wrong there? I don't know where that ends. Celebrities are famous people, and they bring traffic to a site. I don't know that they do more than that. None of these guys that I'm aware of are doing this for free. You don't assume they're not being paid. Am I wrong? When you take a look now at the Brent, look at how you've fallen out of bed. I want you to think of one word, China. One word, China. Maybe a second word, still high interest rates. And that's what's broken the market down. Is this the spot to get short? The way I teach charting, this is the place to cover shorts. Just the opposite. Same in WTI. The trend has been down. You're down to the Bollinger Bands. You're not embedded. Take the enhanced Bollinger Band course. You learn. If you don't understand the charting, take the full charting course, because then you start learning what a swing line is, how to work with it, and as it's coming down, what you're looking to do from there. In the Nat Gas, you're just doing one of these. I'll leave you with this, too. Are you aware that they're moving the Buffalo Bills football game this week to Detroit because the snow is going to be so severe, it's dangerous to be in New Buffalo? This is November 17th. This is crazy. That's how much snow they're looking for. We're not talking 1, 2, or 3, or 4 feet. We are talking a monster. Wow, that's all that I can say. So, I want to remind you that, in the mornings, as you know, I put out my subscriber videos. The first one, 5:30 in the morning, I'm recording. I get up early, folks. I've already written a full market report by the time I'm doing that. And I'll bring up what's going on in Asia. I bring you then into what's going on in Europe, America, the reports coming out for the day. And then we start talking, is there anything to do in the markets, trade ideas. We're going to cover all the futures markets of importance. I don't consider rice, lumber, oats, those markets of importance. So one person wanted me to cover that today. I don't want to. There's no open interest. It's too thin of a trading market. All you can do is get in trouble. You need markets that have other people in it, volume, and open interest to trade. Then we move on to the spiders, the stock market, the ETFs, and trade ideas in those markets. You put it all together, you get a game plan. Sometimes you're better off trading in the ETFs. Example, palladium market. I'd rather trade a palladium ETF than a futures ETF, a futures contract. Risk, volume, what's going on. I think it's much better. I mix the two for you together, give you a whole palette of what to do, and then on the weekend, you get weekly charts. So we look at the bigger chart picture, and a lot of people trade off weekly charts. How do you find out about it and get yourself involved? Just either on the very top up here, there'll be an icon. Give it a click. It's that simple. It'll take you right there. Go to our website at iraepstein.com research. Call my staff. You can get in. I'm Ira. You have a good day, and I'll see you tomorrow. Take care.